Imagine this. You hit the jackpot at a casino only to later realize you might owe thousands in taxes, while your losses from previous games vanish as deductions. Sounds harsh? It's not just a hypothetical scenario. The way the U.S. taxes gambling winnings and allows or denies deductions for losses has sparked fierce debates for decades, leaving players, tax experts, and lawmakers tangled in a web of rules. Let's dive into how these policies have evolved, why they matter, and why some argue they're more about fairness than just numbers. Here's the breakdown. Before 2018, gamblers could deduct their losses only if they itemized their taxes and tracked every bet. Professional players, for instance, could offset big wins with documented losses, much like a business expense. But the Tax Cuts and Jobs Act of 2017, TCJA, flipped the script. It suspended most gambling loss deductions entirely, except for a narrow loophole. Professional gamblers could still deduct losses as business expenses if they could prove gambling was their full-time job. Suddenly, casual players lost a key tool to balance their wins and losses, while pros kept their edge. But here's where it gets controversial. The so-called One Big Beautiful Bill, OBBBA, passed on July 4, 2025, reignited the debate. This law tweaked the rules again, reintroducing limited deductions for high-net-worth individuals who gamble as a hobby, but only if they meet strict documentation requirements. Critics argue this creates a two-tiered system, favoring the wealthy who can afford accountants to track their bets. Supporters, however, call it a necessary collection to prevent abuse. And this is the part most people miss. These changes ripple far beyond individual taxpayers. For the gaming industry, they influence how casinos structure promotions and how states regulate gambling revenue. For professional gamblers, the stakes are even higher. Imagine a poker pro suddenly losing $100K in taxes because they can't prove their losses. Meanwhile, high net worth hobbyists now face a choice. Document every bet meticulously or accept the tax bill they can't offset. So where does this leave us? The OBBBA's tweaks hint at a shifting attitude toward gambling as a taxable activity. But is this a fair adjustment? Or does it unfairly penalize casual players while letting the wealthy game the system? What do you think? Drop your thoughts below. Does the current system balance fairness and simplicity? Or is it time for another overhaul?